You hear gold to 5,000, but the part experts skip is the trap first. A forced futures sell-off can hit silver before any rally, and most people panic sell. If you are in your 40s, 50s, or 60s, you have seen this pattern. The headline shows up after the move. The arguing starts after the pain. Regular people react at the worst moment. And so in 2026, the gold versus silver question is not a fun debate. It is a timing problem. It is a stress test of patience. It is whether you buy protection before fear spreads or after it spreads. Let's start with what you keep hearing. Big banks and market pros have floated targets that sound unreal, including talk of gold reaching 5,000 an ounce in 2026. That idea is tied to a weaker dollar and continued central bank buying. And this is not coming out of a quiet market. Reuters reported that 2025 turned into a historic run for precious metals, with spot gold up about 64% for the year and silver up about 147%, with silver touching a record high above $80 an ounce during the surge. Now here is the part most forecasts gloss over. A melt-up can make you feel richer while your life gets tighter. Stocks can rise on AI spending and rate cut hopes, while inflation risks stay alive underneath. Reuters flagged investor worries that the AI investment surge could reignite inflation and force central banks to pause or reverse cuts. That matters because gold and silver do not respond to the same kind of stress. Gold is the seatbelt. Gold is what institutions buy when they think the system will keep working, but trust will keep thinning. Gold tends to do best in slow, grinding pressure, years of, why does everything cost more energy? Silver is different. Silver is both money and an industrial input. It lives inside electronics, solar gear, medical devices, and supply chains. That means silver can sleep, then snap. It can lag when growth looks shaky, then surge when inflation stays hot and buyers rush in late. So here's the first question for you. Which fear feels more real right now? Slow erosion where paychecks buy less each year, or a sudden shock where prices jump and panic spreads? Comment slow or shock, because your answer points to the metal that fits you. Now let's talk about the trap in that hook, because this is where most people get hurt. Silver is famous for violent drops that happen for a boring reason, trading mechanics. Margin rules change. Futures get squeezed. Weak hands get forced out. In 2011, silver dropped hard around a wave of margin hikes, and coverage at the time described weak longs getting pushed out as stops triggered and traders faced margin calls. That history is not ancient. In late 2025, the CME raised margin requirements again after extreme volatility, and news coverage described silver and gold futures dropping sharply right after the change. So ask yourself this, honestly. If silver drops 12% in a week, could you hold, or would you bail and swear off metals? Comment hold or bail. Now, why would silver drop before it rises? Because silver attracts traders. It invites leverage. And when markets get nervous, leverage gets punished first. Gold is calmer. Gold has big, patient buyers behind it. Central banks have been adding to gold reserves at historically high levels in recent years, including over 1,000 tons in both 2022 and 2023 by World Gold Council reporting. And even inside 2025, WGC data showed central banks kept adding, with net purchases rebounding in August after a softer month. Read that again. The biggest buyers in the world have been treating gold like a strategic reserve, not a trade. Now, here is the silver side of the equation, and this is where 2026 gets spicy. Reuters reporting on Silver Institute data said the global silver market stayed in a structural deficit, with the 2025 deficit expected around 117.6 million troy ounces, even after narrowing from the year before. So you have a metal that can get squeezed by trading rules in the short term, while its supply and demand picture stays tight underneath. That mix is why silver can feel cruel, then rewarding. Now, let's put 2026 into a real-life frame, not a finance podcast. A lot of Americans feel like the floor is moving. You see store closures, you see food budgets stretching. You see housing costs that never reset. You see policy swings that change costs at the checkout line. Reuters reported that higher tariffs pushed the effective U.S. import tariff rate far higher than recent history, and that input costs stayed high enough to weigh on manufacturing as 2025 ended. That kind of pressure feeds gold demand because gold wins when people feel they are working harder for the same life. But silver can win when that feeling turns into action. Here is how silver tends to win. First, Gold climbs and gets attention. Then the crowd looks for the cheaper metal. Then the crowd realizes silver is a smaller market, and price moves can be faster. Then the move feeds itself. But only if the conditions line up. So what are those conditions that make silver the winner? Inflation stays stubborn. Industrial demand stays solid. Investors return to hard assets because they stop trusting paper promises as much. If two of those three happen, silver can do well. If all three happen, silver can shock people. Now flip it. When does gold win? Gold wins when stress looks like policy, not panic. When rate cuts arrive but inflation does not die. When deficits stay huge. When markets rise but the dollar weakens. Reuters pointed out that a weaker dollar and central bank buying were part of the logic behind strong gold forecasts into 2026. So here is a practical question. If you had to buy only one for 2026, which one would help you sleep? Comment gold or silver and add your age range, 40s, 50s, or 60s. Now, let's talk about the part no forecast can tell you, your behavior. Gold is easier to hold because it moves slower. Silver is harder to hold because it can whip around and trigger panic. That means the best? Metal is sometimes the one you can actually stick with. Imagine you open your retirement account and see a green year, but your grocery trip is still a punch to the gut. Then a repair hits. Then a medical bill. Then a property tax notice. You might not need a trade. You might need something that holds value when your monthly life gets heavier. So here's the question. Do you want metals mainly to protect savings or to try to grow it faster? Comment protect or grow and tell me what you are protecting, your retirement, your emergency fund, or your kids. Most serious players think in roles. Gold is insurance. Silver is optional upside. If you picture your finances like a house, gold is the foundation. Silver is the extra room you might sell later if the price is right. Gold is what you want to own before the crowd arrives. Silver is what you want to already own before the crowd panics. That brings us back to the hook. The trap can come first. A sudden margin-driven shakeout. A sharp sell-off that scares people out. Then, later, a strong rally that rewards the people who stayed calm. So if you take one lesson from this video, let it be this. If you buy silver, you must expect pain first. Not always, but often. If you cannot tolerate that, then silver is not your asset. Gold is different. Gold can grind. It can be boring. But boring is often what you need when your goal is protection. Now, one more thing to watch going into 2026. Investors have been warning about inflation risks connected to the AI build-out, including energy and chip costs that could keep price pressure alive longer than people expect. If inflation stays alive, metals stay relevant. If inflation reaccelerates, metals can get loud again. Before you go, watch 3 signals that move these metals. Watch real rates, because when real rates fall, gold often breathes easier. Watch the dollar, because a softer dollar can lift both. Watch the Fed path, because even the hint of cuts can pull buyers in. Now a question for you. Do you own metals in your hand or only through a ticker? Comment physical or paper and why you chose it. So here is the final question. If prices keep rising and your paycheck does not catch up, what is your plan? More hours, more debt, or more protection? Comment hours, debt, or protect. If you want more straight talk about money, prices, and the shifts that shape normal families, hit like, share this with someone who keeps saying, I'll start next year, and subscribe. This channel is for people tired of being told everything is fine, while the receipt says otherwise. In 2026, the winners will not be the loudest forecasters. They will be the people who prepared before the crowd learned what to fear.